Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we are going to be jumping down into the world of Bitcoin to see what's been going on most recently and to have a look at some must-see data. This will hopefully give us an idea of what we think is likely to happen next, considering, all variables. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out today? Okay, guys, let's get right on into this and waste no more time. Let's jump on down into the desktop and take a look at some of these this must-see data, this really interesting kind of set of variables that I think are going to help us understand what is likely to happen next. So we're going to start things off with, guys, a couple of Cointelegraph I guess articles. Now these are they're okay. Some of these ones are actually better than some of the previous articles we've spoken about in the past. There's a couple of things inside these that I think are just kind of worth noting, right? So this one here is actually titled Bitcoin is discounted near its realized price, but obviously analysts say there's room for deep downside. So again, this doesn't really change the narrative that we've kind of had out there for quite some time, but the realized price was an interesting Glassnode piece of data, so I did want to check that out and have a look at it, right? So we're just going to shoot on through some of this. I'm not going to go through a lot of that kind of a lot of this kind of stuff. It's really all about this part of the article, right? So basically, as the result of the market pullback, the price of Bitcoin is now trading the closest to its realized price since 2020. And I'm going to jump over to Glassnode in a second. And according to Glassnode, the realized price has historically provided sound support during bear markets and has provided signals of the market bottom formation when the market price trades below it. Okay, so it's kind of interesting. So what I thought I'd do is I'll bring up Glassnode here. Let me make this a little bit bigger so we can get a good idea as to kind of what's going on. Oh, that needs a reload. Okay, let's try that. That didn't work. How odd. Bear with me 1 second. There we go. So we'll bring up this Glassnode, right? And yeah, so basically this report is the realized price for BTC, right? So for Bitcoin. This is on the daily chart, and I've zoomed out all the way through to the previous bear market lows, right? So over here we can see that we have the 2015 bear market low, right? And essentially, you can see the orange line is the realized price, okay? And you can see that we were below it for a period of time back in 2015 into 2016, right? Before we went above it and we traded up into the 2017 highs. We then obviously pulled back down, and it was basically December of 2018, the bear market low, that we got below this realized price. Then obviously once we had that bear market low, we traded back up again, okay? Then of course the pandemic crash brought us briefly down here and then back up again. So I think the thing that's important here is if we are coming down to a bear market low, we understand where this price is. It's about 23,900, so call it 24k. Now I'm calling out 22,900 as the kind of low point that I'm looking for. We might go down a little bit lower than that, and I'll have a look at the charts in a moment. So essentially that would bring us just below this realized price in a similar way that we were in 2017, 2020. Now, obviously, we've got a shorter period of time. Every time that we are inside here, it's lasting less and less time, right? So important that we understand that when we do move below this area, it's going to be short-lived, okay? I don't think it's going to be a long period of time. So I think there is going to be a pocket of accumulation that can be had. I think we'll probably see something a little bit longer than the pandemic, but a little bit shorter than 2019, okay? But obviously 2019 was a nice steady growth. And if it wasn't for the pandemic, we would have actually had the bull run slightly earlier, in my opinion. So interestingly enough, though, I think that we're probably going to be down below $24,000 for a few weeks at least, I would have thought, and then obviously move on out of there pretty briefly after that. And I think we are going to see something pretty sharp, just like this in 2019, going up, right? I'm expecting some kind of really sharp rise up, and I would be surprised if it doesn't go into new all-time highs reasonably quickly. And I think that's all going to be around the supply shock that Bitcoin is having, okay? And I've got to talk about that in a moment as well. So that's kind of the first article, right, that we really wanted to kind of talk to you about, just to kind of get you an idea as to kind of what that means. So I'm also going to show you some other variables as well. So as we come up into this particular article, again, this is basically just saying, you know, there's analysts that note the parallels between the March 2020 crash and will this time be any different? And there's not actually too much in here worth kind of really noting or talking about. You know, essentially, there's a lot of stuff that you'll find all over Twitter that's pretty usual kind of stuff. Nothing in here that I would say is actually going to be giving you any decent insight, other than one thing which I think was down here, right? So this one is all about the 200 moving average, but you know, guys, that I don't believe in averages all that much, simply because they are lagging. They only show you what's happened previously, but you know, the price resonates incredibly well at these areas, specifically because they're easy to understand for many traders. So traders were going to react to the prices at very specific areas, right? So when the price moves down to the average price, basically that's basically telling people, well, I mean, from an analytical point of view, it's just telling you it's reached the average price, right? And if it goes below the average, well, that's going to tell you that it's going to be a massive upswing, right? You're going to kind of get the idea that if you're below average, above average, or on average, right? So if you do go trading below the 200 simple moving average here, historically speaking, that has led us to getting a reversal as well. And again, it's because you're below average. It's pretty simple terms, but it is probably the most interesting part out of all of this on here. I mean, the fear and greed and stuff like that is pretty standard stuff. So what I thought I would do is I'll jump back over into Glassnode here for a second. And what I want to do is I want to take a look at a couple of other variables that before I take a look at the 200 moving average, for example, just so we can get a good idea as to kind of what's going on, right? So obviously we have the realized price, which is about $24,000. We know that we're going to be heading down below that most likely for a brief period of time before we start to see, in my opinion, a nice sharp increase like we had here in 2019. Now, if I come back out of this and I come over to the exchange data, we take a look at the balance on exchanges, we can of course see that basically during the previous bear market lows, and the reason that there was such a significant amount of accumulation time, in my opinion, was the fact that we had nothing but an increase in BTC on the exchanges. Even during January of 2019, you can see that there was actually a little bit of a lull and a little bit of a pullback before that surge upwards continued into 2020, right? Instead, what we've actually got since then is nothing but decline in the amount of Bitcoin being held by exchanges, right? So massive amount of accumulation has been going on, or at least a lot of shrinkage of supply of BTC has been going on, right? And this actually, I think, led to the significant surge of 2021 going up higher because there was such a squeeze on that supply. Essentially, little demand was required to really push the price up, and it compounds down. Once you get a bit of demand, then basically more demand comes in as that price continues to surge up. So what we are looking at is a continuation of this decrease of the balance of Bitcoin on exchanges. We had a little bit of a blip most recently with whales loading up the exchanges to try to shake out retail investors. That's still going on, but it has started to pull back down again. So if I were to just bring this right the way back into, let's say, 2021 here, you can see how we had a surge up and then we pull back down again. This is not really too dissimilar to what we had seen previously, but essentially, yeah, we are looking at a decent amount of accumulation actually going on. And this is again something that we can check by taking a look at a few additional reports. But before I go into addresses and things like that, I just want to take a look at the inflows. So you can see how the inflows spiked up massively on this last little pullback and really trying to shake people out. And then, of course, have dropped all the way back down. So yesterday's inflows were 57,000. If we take a look at the outflows, same scenario, but we are tracking at about 59,000. This is basically telling us more Bitcoin is leaving than is going on. This is the same continuation as what we had seen previously. Now, if I come over to the addresses here in Glassnode and we just take a look at the whales in the space, we can see that basically the whales had sharply increased in late February of 2022. Okay, and they started to trade sideways. Now, obviously, when they loaded up the exchanges, as we can kind of see the balance on exchanges going up, we could also see the wallet addresses holding more than 1,000 BTC dropping down. But I do imagine that this, once it reaches that bottom area, is going to reverse back up again, and we're going to see a significant spike as they take all of the BTC back off of the exchanges. Just because it's gone onto the exchange does not mean that they are going to sell it. Basically, by putting the Bitcoin on the exchange, it basically can create a lot of fear in the space. Oh my God, there's loads of whales moving their Bitcoin from wallets to the exchanges. And again, this is really visible from the whale alerts on Twitter and all that kind of stuff. So it's important that we understand that sometimes these are these are strategies and tactics that are used to shake out retail investors. Just because it's gone to the exchange doesn't mean it was sold on the exchange, and it just means that actually, you're moving Bitcoin around from wallet to wallet. So do take it with a pinch of salt. Obviously, there are a lot of sales and stuff like that going on. The price of Bitcoin has been pulling back and all of that kind of stuff. But essentially, it's important that we understand that actually there's a lot of this is all about strategic play. It is about trying to make as many retail investors feel uneasy in this space as possible, so that they will either short the market, long the market, or whatever is required from the whale's perspective to accumulate more BTC. Their objective is to get as much BTC as possible, and they are going to do it at the expense of the retail investor. Okay, so just keep that in mind. Let's jump on back down into the desktop. This time, let's actually jump on over into our charts here for BTC. So obviously, I want to take a look at that 200 simple moving average, but I also want to talk about what is going on most recently and what I am still expecting to happen later. Okay, so we are in a 5-wave structure going down. We are currently in a complex 4th wave correction. I am targeting this price movement upwards towards 32,000 and 34,000. This is going to be the sweet spot that I'm looking for this 4th wave going up. Okay, now depending on how high this 4th wave goes, it does depend on how low that 5th wave goes. Okay, so at the moment we're actually trading reasonably well here. We aren't doing anything too crazy. The price is moving kind of as you would expect here. And I am looking still to move this up. Now, obviously, it's been incredibly stale over the last few days. Not too much price action has been going on. The 4-hourly stochastic RSI has been correcting nicely. The 8-hour is, it's just out of that overbought area. The daily's progressed up a little bit. And again, these things are going to fuel us moving down much lower. So again, we are just kind of witnessing here a really, really slow and gradual burn upwards. This is taking the stochastic RSI on the daily up higher, and that will allow us to pull back down deeper at a later date. Okay, so at the moment, as I said previously, I'm looking at about 22,900 as my current 5th wave low, but it is really dependent on how high we can push this 4th wave going up higher. Okay, so let's jump on over. I'm going to jump into this chart, and this one actually is not using a stable coin. This is just using a calculation of USD, and this does give us different prices. So actually, you know what I will do? I'll stick it with the USDT and Binance data, just because the stablecoin pair is a much better one to kind of be looking at. And what I'm going to do is I'm just going to zoom this back out, and I'm going to zoom this in a fraction here to make this a little bit more visible. And then what I will do is I'll go up to our indicators here and just look for the simple moving averages. There we are. Apparently I need to upgrade, so I need to remove one. So let's go and take the Bollinger Bands off and throw on here the simple moving averages. There we go. Okay, so we've got a 200 moving average here, and what I'm going to do is I'm just going to come into the gear icons here, and what we are going to look for is to find out which one of these is actually our 200 moving average, because they're all the same color. That's always great fun, isn't it? Okay, so we are 1, 2, 3, 4, 5. Okay, so with the 5th one down, we'll get rid of you, leave the 5, and just get rid of all of these others. And hopefully that is only going to be the 200 moving average. There we go. Okay, so this is our 200 simple moving average, and as you can see here, this one's actually trading a little bit lower. So if I come over into this data, you can see here this one's actually, it's actually not too bad. So yeah, we are right down here, right? And I think by the time we actually get up to actually pulling back down into this low range, we're talking about 22,900. This is actually saying we should go down a little bit lower than 22,000. So it'll be interesting to see if we actually do drop down below this area or just rest on it. So as we can go back into the previous bear market lows, we can see that we hit this level and then we bounced on from it. In the pandemic crash, we actually dropped down below it, but then rallied from it. And over here, we rested on it, briefly going below it and then going up higher. So it looks like this is the area that we want to be retesting on. And again, this actually comes in line with my Elliott wave theory as well, in suggesting that we are coming down towards 22,900 dollars, okay, that being the area that we're going to be bouncing from. So essentially that seems to be the bear market low point, and obviously the altcoins will bleed out maximum amount of pain at that point as well. So essentially that's kind of what we're looking for here. We're looking for Bitcoin to come down into these low ranges, into this range of about 22,900. Now it could take a couple of weeks to get down here. I estimating kind of like beginning of June. But timing is really, really difficult to kind of get there to understand, right? So it could take a lot longer, it could take a little bit less. I'm not going to be right on the timing. I'm just simply not. But I do think that we are likely to come down into this range, 22,900, bounce from this 200 simple moving average, because again, I think that's going to coincide nicely. Again, it is a lagging indicator. Traders will react to it though, and it has come in nicely with the Elliott wave theory there. So I can see that kind of bouncing and working really, really well for us. So again, I'm not expecting a massive kind of surge upwards from there straight away. As you can see, we kind of bounce around on it a couple of times around these low areas. So there's going to be a first bounce, then a pullback, and then probably a surge from there. Again, take a look over here. You can see that we're touching on it a few times, and then we rally on up from it. So a few weeks down there. So as always said before, I was always expecting a bit of an autumn kind of surge upwards, but it might actually happen a little bit earlier than that. It might be late summer. So it'd be interesting to see how that plays out. All timing wise, I'm never going to get that right, but I do think that this is going to work incredibly well for us, specifically if we're looking to accumulate. And I've been talking about this for quite some time on the channel. Bear markets are where the money is made. I've obviously done a lot of accumulation based videos in Discord and obviously on the YouTube channel as well. So I think it's important that we understand that, there isn't going to be a huge opportunity to buy the bottom, but this is going to be getting us as close as we can to the bottom for accumulation, and then looking for that next run to the upside. So guys, I am going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.